Welcome back. Hope you're having a good morning so far. There is definitely risk off on the Lal Street, something that we saw yesterday, large selling from foreign investors as well. But this morning, the picture is a bit different. We could perhaps see a bit of a recovery. Whether that gets sold into, only time will tell, but there's definitely caution on the street. Let's get straight to individual stocks then. Abhishek is joining in first up to tell us about Bajaj Finance and why he's watching that one. Abhishek, over to you.
Well, Sonia, business update has come in from Bajaj Finance. Fabulous customer growth. However, AUM growth has actually moderated a bit but remains strong. So new loans are at all-time high on a quarterly basis, coming in at 78 lakhs, up about 14.7% sequentially. The customer base is strong, growing at about 19.1% YOY and about 4.9% sequentially. Q3 historically has been a strong quarter for Bajaj Finance. However, this time the growth rate is on the lower side if you compare to last 3 to 4 years. AUM growth remained healthy at 27.4% YOY and about 5.7% sequentially. This growth rate, however, if you take a look in as per historical trend, is on the lower side in last 4 to 5 quarters. Average ticket size almost flat on a sequential basis. Deposit momentum that continued to remain strong, and capital adequacy ratio has also been strong despite this growth rate. So not much of capital consumed is a good point. Liquidity in the balance sheet has improved on a sequential basis. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Marico came out with their operational update. Mangalam, how did it look?
Well, it's largely in line with expectations, and what the management has been guiding for as well. They've guided for a mid-single-digit volume growth in the second half of this year, and that's what the companies reported in the third quarter itself. They said that the consolidated revenue grew in low single digits. Gross and operating margins have improved both quarter-on-quarter as well as year-on-year. That was expected too, and as a result of which, there's a modest growth in operating profit. As far as their segments are concerned, Parachute Coconut Oil posted low single-digit volume growth. Saffola franchise grew extremely well, double digits in volume terms, mid-teens in double digits in value terms and mid-teens in volume terms. Value-added hair oils, that's the one which had a subdued quarter, and that's telling you that there is weakness in the rural area and there is strength in urban consumption, which is reflected in the way premium personal care has witnessed a double-digit growth. These numbers, while they're in line, they're no great shakes, So see, no more than a mild green on the stock.
Okay, and we must remember, YOY numbers will look good because they didn't have a very good third quarter last year either. Thanks a lot for that, Mangalam. Abhishek, you said fabulous customer growth for Bajaj Finance. What about RBL Bank?
Well, RBL Bank is one of the best loan growth that you are seeing in last 3-4 years. One of the best business update amongst all the banks, and CASA ratio all-time high. So deposit momentum on a YOY basis is the best in last 5 quarters, coming in at 11%, while sequentially the growth of 3% is perhaps the best in 3 quarters. The loan growth coming in at 14% YOY is perhaps the best in 12 quarters, and sequential loan growth of 5.8% is perhaps the best in 15 quarters. So they have gained market share on a sequential basis. The credit to deposit ratio has also improved, which suggests that in a rising interest rate scenario, you could see net interest margin expanding on a sequential basis. CASA ratio, or the low-cost deposit ratio, unlike peers where we have seen declining CASA ratio, the bank has actually reported, improvement in the CASA ratio, and it's at all-time high of 36.6% when compared to 36.2% in the previous quarter. Back to you.
Got that. That's 2 thumbs up for Mr. Subramanya Kumar Iyer, right? Well done. What about MMFSL, Abhishek?
Well, RBI had directed a company to immediately cease their recovery process via outsourcing in September 2022. So this restriction has now been lifted with immediate effect. The restriction has been lifted after the company has informed RBI about the fact that the recovery practices and outsourcing arrangements have changed now, and they have tightened the process of onboarding the third-party agents, which wasn't there earlier. So they have also strengthen the accountability framework as per the board approval. So strengthening of processes has actually helped them in getting approval from RBI on outsourcing of agents. Back to you.
Okay, thanks a lot for that. Well, let's move on. Vivek is tracking some more stocks in the news. Vivek, what do you have for us?
Well, good morning. Quite a few stocks on my radar. First on our list is IRB Infra. The board has approved a stock split in the ratio of 1:10. The board intends to complete this corporate action by the end of February, subject to regulatory approvals. So keep an eye out for Adani Ports as well. The company has released the operational update for the month of December. So the company managed to handle a little over 25 million metric tons of total cargo in December 2022. Container volumes are up 8% on a year-on-year basis. Now, Morgan Stanley has written a note on the back of this operational update. They believe that there is a downside risk to the company's guidance of 350 to 360 million metric tons for FY 2023. The implied ask rate for Q4 is almost a growth of 24% on a year-on-year basis, which at this point of time appears challenging according to them. Also keep an eye out for LJVN, an important development coming in there. The Union Cabinet has approved an investment of a little over 2,600 crore rupees for a hydro project based in Himachal Pradesh. The company has also articulated ambitious plans for addition of capacity. So the company is intending to target 5,000 megawatt capacity by 2023, 25,000 megawatt by 2030, and 50,000 megawatt of hydro power capacity by 2040. Keep an eye out for HPCL as well. The company has forayed into the petrochemical business to pre-market brand polymers and also has entered into an MOU with NTPC to target the renewable energy business.
Okay, all right. Thanks a lot for that, Vivek. Well, Sonia, we got those Class A truck sales as well that flashed. Didn't look too good.
They didn't look too good on the face of it, Nigel. So the numbers, the North American Class A truck orders are down 18% compared to what we saw in the month of September as well as October. And the truck orders are now down 50% from the September high of 56,500. But I went through the website, the ACT and FTR website, and over there, the companies who track these numbers closely, they've said that on the surface, when you combine with the 26% month-on-month decline, it looks weak and might suggest weakening in demand. But what happened is that a lot of the ordering began in September itself. So it began ahead of schedule, which skewed the average now on the upside. So the September orders represented the highest monthly total on record. So we are inclined to view that the December order intake is a solid end to a robust 4 final months of the year. So ordering activity has picked up. It's just that it was front-loaded, in the month of September. That's why December looks a bit weak. So I'm going with a mild red tick, but I don't expect too much weakness because the ordering has been very strong in North America.
Oh, that's very important. One can't make that out when one looks at the numbers. Thanks a lot for that, Sonia. And now for the big cue of the morning. Crude prices down below $80 after a long gap. Manisha, tell us, does it stay there?
Well, this looks like for the very near foreseeable future, yes, at least for the month of January, yes, there could be some more pressure coming in. It is really mild weather across the major consumers like Europe and US, even China for that matter. So the demand has been on the weaker side. So the crude oil prices have declined 10% in last 2 trading sessions. I mean, for 1 year to start like that, and that too January to start like that, has perhaps happened for the first time since 1990. The last time that happened, that you saw this kind of a decline in the month of Jan, in the beginning of year, was at least 3 decades ago. The pressure comes in also because you are looking at higher power generation coming in from wind. The gas storage in Europe and Germany is at 80 to 90%, much above the average of 70% that this time usually sees. So that really weighs on. And then look at the economic data, whether it's the PMI data that we saw from China, which is contracted for a 5th straight month, or US, which is contracted for a 2nd straight month. So the numbers do not give you confidence as well. And not just crude, the gas prices have declined by 25% in last 5 trading sessions itself. So that's also lost a 0.25% of its value in the beginning of January itself, quite unheard of in a very, very long time. Markets also are reacting to the IMF suggesting that there will be slower growth going forward in major consumer countries. So whichever way that you look, the very near term does look slightly on the bearish side. But having said that, most banks and brokerages will tell you that come second quarter, at the first half end, you will be back in 3 digits when it comes to the crude oil prices. So well, this month does look bearish, but foreseeable future, Feb, March, April do look bullish when it comes to crude.
Okay, thanks a lot for that. Down 10% in the last 2 sessions alone, a free fall over there in crude.
And she's talking of 3 digits sometime later.
Okay, I guess works well for oil importers like us. But in general, it talks about a slowdown in demand globally, which is not a good thing.
I think OMCs could be in focus today. OMCs,
Oh yes, I think green on HPCL.
HPCL. Marketing margins will obviously, turn positive.
Yes,
and even aviation companies, right? I mean, I'm glad you pointed that out because in any case, the numbers are looking so good on the demand side.
Yes.
And now on the cost side. side as well.
So aviation, paints, refiners.
And tire companies.
Tires, yes.
Okay. Well, here's a quick recap in case you missed out on any of them. Positive news flow includes names like Bajaj Finance, Marico, RBL Bank, M&M Finance, IRB Infra, SJVN and HPCL. While stocks with negative news flow, Adani Ports, ONGC and Bharat Forge. Take a quick break. Nishchal Maheshwari of Centrum Broking will be with us to do some fundamental analysis. We'll also connect with Jal Irani, the Executive Director at Nuvama Institutional Equities, after the Cabinet approved a national green hydrogen mission. More on that in a bit.